GM everyone, welcome back to another episode of Touchgrass Podcast. Today we have AK from QFX. For the past couple of months we've been interviewing different Perp DEX founders. Our main core focus was only on crypto, but I think we have seen the equity craze, the commodity craze, and AK has from quant background, and he's also building a Perp DEX that's kind of purpose built for more traditional assets as well as crypto. So we wanted to kind of understand how different something that's built purpose built for traditional assets compares to something that is crypto native, and yeah, and dive more into his journey as a trader to builder and all that stuff. AK, welcome to the show, man. How are you?
GM, yeah, thanks for having me. I'm doing great. Doing even better now that I'm on the show. So yeah, very busy nowadays, but glad I found an excuse to take an hour away from the desk and come here and share some more thoughts with the audience. So thanks for having me.
Awesome. Before we get started, right? Could you kind of give a quick background about yourself? You were a very profitable trader. You worked at different quant firms. You were into research. I also saw that you were also did research on quantum computing, and you recently just put out a post on it. We'll get into that, but just kind of give a high level overview about yourself before you became a builder.
Yeah, so I grew up in the UK, as you can tell from my accent. Always like into math nerd, Olympiad, all that kind of stuff. Didn't really have anyone in my family who was kind of down that line. You know, my parents were doctors, but I decided to go and study maths at university, and then um, uh, just found my way into quant. That's like seemed pretty natural progression from what guys were doing who were based at my university. So I kind of ended up in this job, which it turned out was very suitable for me because I'm a competitive person. I like playing a lot of games. I played a lot of poker, and I like maths. So I didn't know much about the financial markets before I started. I just knew that if you could write good algorithms and you could kind of understand which way the markets were going, you can make a lot of money. And I started my career. My whole career has been in HFT. I started in Flow Traders in Amsterdam, which is pretty well known in the crypto world, I guess, now. And I was one of the first guys on the crypto desk there. So now it's like 40, 50 people and accounts for more than half the firm's P&L, well over $300 million a year. Back then it was smaller, sub $100 million operation, but managed to learn like a lot, right? And then I actually started replicating some of those strategies onto my personal book and basically left Flow because very soon I was, back in those days, right, like 2021, you didn't have to do anything very smart to make money in crypto, and that was doing pretty well. I joined Tower Research, which is a little bit more hidden, I guess, in the crypto world. They don't like to have too big of a public profile, but they were quite a successful shop. Made right near $2 billion, I think, the year they hired me just in crypto, and most of that was from like trading on major perps exchanges around. Well, Hyperliquid wasn't really there back in the day, but Binance, OKX, Bybit, Gate.io, place like that, and very very high volume, very highly scaled up strategies there. So that's my kind of background. There's always been HFT. It's not uh, necessarily super crypto focused. I would say, when I was working in these shops, really, we viewed the market as just like a time series, right? It's like you have some prices and you trade around them and you make money. It doesn't matter if it's crypto, equities, futures, whatever. At Tower, I actually moved from trading from the crypto team to the futures team, and it was very kind of similar work. And that's like the reality of the industry. Like most of the strategies that do most of the volume in crypto markets actually don't need to know much about the underlying projects themselves at all. And it was basically when I made that shift into from crypto trading to more like tradfi trading that I noticed that there was a big design gap between the exchanges in the crypto world and the tradfi world. And when I noticed that, it became impossible to unsee, right? So for all you crypto guys who are listening to this who maybe don't know what like a traditional stock exchange looks like, you've only been on like the perps dex, meta, you have to do like these long KYC processes that take many days. You have to deposit your money, that takes many days. The UX is not good, it's not 24/7, leverage level is really low, right? So for me, the interesting thing there was these are tech problems that crypto had solved and the tradfi world hadn't. And that's how I've ended up where I am. Is we're building QFEX, which is the 24/7 perps exchange for traditional assets. We have designed the entire system to be completely native and optimized for traditional assets only. I think they're taking those innovations from the crypto world and moving them to the traditional world, where the upside is a lot higher. And that's what I've been doing for the past year. It's been a pretty wild ride.
And how's the
And
transition been from like, being a trader to now being a builder and a founder? Like, how do you feel in both camps?
Yeah, it's interesting. I mean, like you can split that off into different segments, right? So one is like how is it being an employee versus being a founder, and I would say even as a trader, you get a lot of responsibility, right? So it wasn't like I was just responsible for certain tasks, and provided they were done fine, I could kind of move on. There was always this kind of constant push to make more PNL. If anything went wrong with the strategies, it was your fault. So in that sense, I felt like the stress and the amount of responsibility hasn't really changed too much. I always felt very motivated by the success of my strategies in my previous job, and now I'm very motivated by success in my company now. I would say the biggest shift really is trading is a very zero EV game, right? Like if you think about it, every time you trade, you're trading against someone, and in the futures market, in order for you to make money, that person has to lose money, right? So any kind of edge you have, we use the word edge in trading, and that really what it means is how far ahead of you are your next best competitor. And if you are not much far ahead of your next best competitor, you're going to lose money. And so trading is a very secretive, very guarded world. People don't share information. People don't talk about work outside of work. The idea is, if you share an idea that you had with someone else, they will run it themselves and make money, and that money will be at the expense of you. Now, compare that to building basically a product-based company. Most product-based companies succeed. Well, I mean, most new startups, which are wildly successful versus ones that aren't, typically do have competitors, and their competitors typically are wildly successful, and that leads to a much more grow the pie kind of mentality. So in the software world, you have things like open source. Like open source cannot be a thing in the trading world, because like if you open source something, you just cost yourself some money. The only reason open source is a thing is because like it's free to give away that software. In trading, nothing is ever free to give away. I'd say that's been the
yeah.
biggest mindset shift for me. Kind of moving from that world to more of the tech world, being more on the builder side, is really understanding that not everyone is competition, or even your competition can help you, and there's ways that you can work together. And you should try and grow the pie, and you should try and bring good into the world, because even if you get a very small piece of a very fast growing pie and you help to grow that pie, that is what can basically give you big results, right? And there's very few examples of successful tech startups that have been monopolies or managed to completely monopolize an industry. Everywhere you look, there's multiple big winners, and the important thing is the winners there worked, even if not directly together, but at least not against each other, to grow an industry, which is the powerful part. So that's like something that I learned in the last year.
Did that mindset shift come when you attended YC? And I think you said your interaction with Sam Altman, and that kind of shifted how you look at things. And did that happen there, or like when did that kind of shift happen? Like, and also, like, what was your overall experience at YC?
Yeah, I'd say it even started happening before. I started working with my co-founder on this, informally, for like a month, let's say, before we applied to YC and got in. And we were already using things like he introduced me to what Docker is, for example, right? Like we don't use Docker in HFT because it adds too much latency onto the system. You don't build things in Docker. And I was like, how much do you have to pay for Docker? Like, I imagine it'd be expensive because it's doing a lot of work for us. And he's like, no, it's completely free. It's open source. So already at that point, I was kind of understanding that, okay, not everything has to be built from scratch. We can build on top of other people's things. And, maybe one day we can make a foundation for other people to build on top of as well. And that's really where an exchange is, right? Like we're building a marketplace for people to transact with each other. And that's how we should view things. And that's how we should basically view the pie, and try and grow things basically that way. So it already started happening during YC. Obviously, when we were in YC, fantastic experience. We were two guys from a place that is not really recently been responsible for many big startup success stories. Doesn't have that entrepreneurial culture anymore. Let's say in the UK and in London, going to San Francisco, the universal hub of startups. Certainly on this planet, let's say. being at the forefront of all the new cool things that are happening in AI, in emergent hard technologies, in robotics, in space technologies, in financial technologies like us. Seeing really how far people are willing to go to help each other without expecting any immediate reward, and seeing people who built those relationships over time and seeing how they can mature and how they can be productive for everyone, that was like really inspiring. So you asked explicitly, like, how was YC? I think YC was amazing for us. I think it depends a little bit which partner you get. And for us, we were in like the perfect group of partners. I'd say all the partners in our assigned to our batch were like really, really good. And yeah, like definitely changed my life. Changed the direction of the company. They encouraged us to do things that were very counterintuitive for me. I would say as a trader, always used to thinking in that very kind of rigid, kind of competitive manner, and allowed us to think in different ways that really accelerated the company. I think that's the key thing I would say is like these programs like YC and there's others as well out there. They call themselves accelerators because like the whole point is you give up some equity, fine. So YC, they put an uncapped safe in as well, but they ask for 7% for the first 125K. You give up some equity, but the amount of boost you get as a first-time founder who maybe doesn't know very common failure modes for companies early on, which is surprisingly common across many companies, bureaucratic, administrative, recruitment-related, initial growth-related. In the early days, most companies are more similar than they are alike, and they fail in ways that are more similar than they are alike. And having someone who's seen, I think YC's probably had like maybe even like 5,000 companies by now, right? Like in that ballpark. And having the cumulative wisdom of all of them is like really, really powerful. So it was very helpful for us for sure.
And when was this? When did you attend YC?
Exactly a year ago now, actually. So we were in the spring 25.
How many crypto companies were there a part of the group? Because I think everyone like on CT is like that's a good indicator of like where we are in cycle or something like that. And
Yeah.
how many, not fintech, but how many crypto companies did you kind of see?
So there were 0 crypto companies. Even at that time, we did not consider ourselves a crypto company. Even now, we don't really consider ourselves a crypto company. But we are now on stable margin, and we have like a crypto-like UX. We're much closer to a crypto company now than we used to be at the back time. But we don't list crypto assets. Like we're purely focused on TradFi. So yeah, the answer is 0. And if historically, if you look back at it, there was 1. There was us, and that was it. Really.
And then I think AK, that sort of segues perfectly into sort of what you guys are trying to do. I think the number one question I had when I was looking into the project and trying to understand more, obviously we have a lot of the traditional crypto perp DEXs that are adding equities, commodities, a lot of these sort of traditional assets per se. What's the difference between what they're doing and what a purpose-built perp DEX for these traditional assets looks like? Like, what's the difference? Like, what is the sort of core differentiator here that we're targeting?
Yeah, I mean, there's basically 2 things. So the first thing is really simple to understand. It's just focus, right? Like we are 100% focused on bringing TradFi, bringing crypto-like UX to TradFi traders. That one doesn't mean that we just limited to crypto. We have users from kind of all kind of trading backgrounds. Some of them have never traded on a perp DEX before. They've learned what a perp is from the first time on our platform, and that's really encouraging. The other, and we support like fiat withdrawals, fiat deposits. We're fully connected into that ecosystem as well as a crypto kind of on-chain ecosystem as well. And that allows us basically, it's from like a growth GTM perspective, we have, I think, the widest range of securities on offer of any perp DEX. There are multiple equities out there. For example, we just listed 5 photonics names today after consultation with a few of our initial users. You don't find those anywhere on any other perp DEX out there right now. Same with a lot of the defense stocks we have listed. Same with some of the AI stocks that we have listed. So that's one thing. We can list a lot of things because we have the time and the energy to focus on them. That maybe other exchanges were distracted with, let's do prediction markets as well. Let's do crypto as well. Let's do attention markets as well. That, doesn't really work super well. And it kind of dilutes the brand and the focus a little bit. So that's kind of more on the gross GTM side. And then on the other side, the technical side, if people ask me what did we put the most thought into when it comes from a design perspective for the exchange, it was the funding and the liquidation mechanism, right? And we designed it. We basically studied all the liquidation mechanisms that existed out there and truth be told, a lot of them are very, very similar and very similar to the one that BitMEX came up with back in the day. I think Taran Chitra did a paper on that. But we've designed ours from scratch, taking inspiration with what we thought was the best one, which was actually FTX, we found had the best impact and the best slippage and the lowest liquidation fees for its users. And we basically ported that and adapted it for TradFi and the different volatilities you see in TradFi, the different events you see in TradFi. And I think we have the lowest likelihood of people getting liquidated. I think on any kind of TradFi product that you'll see out there is on QFEX. We have the ability to do everything in cross margin. So a lot of other perp DEXs, they'll only let you trade TradFi on isolated margin. We have ability to do everything in cross margin. And our funding formula just also makes a lot more sense for the TradFi use case. A lot of other people kind of cargo culted that kind of crypto formula that you see into the TradFi war, and doesn't really make a lot of sense there. We have thought about it from scratch and redesigned it from scratch, and we've thought about all the consequences that come with different design decisions. And we don't have to, we're never going to be in a place where we have to support one funding formula for like meme coins, which have like a 70% APR and can crash like 400% in a day, versus one for like a large cap US stock, right? We only list those kind of traditional assets, which aren't scams and rug pulls and stuff. So yeah, both those things kind of from a GTM side and also from a technical side, which when there is another 10-10, hopefully we'll come out of it basically completely strong. That's the plan. We've done stress testing against those scenarios, and we're pretty rock solid over there.
100%. I've read the article research put out by I think 4 Pillars. That was a fantastic one. I think everyone should go read that to kind of more understand the nuances of the differences like that AK just laid out. But I want to ask something that recently happened. I think just today they announced, and you mentioned your kind of differentiator is focus, whereas Kalshi and Polymarket, they've just announced that they're doing perps. Everyone's like, this is kind of dividing focus where they have not yet perfected prediction markets, and they're right now diving into perps. What kind of signal does that send to the market, and how are you kind of perceiving it?
Yeah, it's very bullish for us, right? Like if people come in and they want to try and compete with us, that's great, because it means that they've done their research and they know there's a big market there, and may the best product win, right? Like, it's not my place to comment and say, these guys are gonna do well on this or these guys are going to do badly on this. I think, from my perspective, as long as the space grows and the trading experience improves for stocks, and that leads to downstream implications, better trading outcomes for retail, for institutions, better liquidity for institutions, the end of the tyranny of these old school exchanges like CME, who exist mostly on regulatory moats, right? That's very, very bullish for me. And we are working 996 every single week, trying to make the best product that will do that. And quite frankly, if one of our competitors wins, and it's great that competitors are coming in, then they must have built an even better product, which is even better for the space out there. So we see it like a very, very strong bull signal. Obviously, they have teams doing their research. They want to come into the market because they think there's a big opportunity there. Obviously, they kind of come into it more from the prediction market side first. So yes, they will have slightly divided focus, but they also have a smart team. So I'm sure they have a very strong fighting shot at kind of winning the space in the long run. And
I think the takeaway is, I think you mentioned it as well, like everything exchange, where you have equities, like sort of every product in the trading terminals, and everyone trying to do the same kind of goal, where they want to list everything and anything that has a price and that can be predicted and bet on. So, I mean, I'm excited to kind of see, and it's going to be a fun competition, obviously. We have so many things that are really good and getting better. But AK, I want to ask, you mentioned FTX, right? I've heard this on CT. I've heard so many of my trader friends talk about this as well. I personally couldn't trade on FTX back then, but they said it had the best product, best UI UX, everything was the best. And even people who are currently trading on even Hyperliquid, they say FTX is still the best. What made them so unique? Is there something that, in terms of user experience point of view, you're kind of, and did you personally trade on FTX?
I did, yeah. I had an FTX account. I withdrew all my money for when the first rumor started, so I didn't lose any money there. Although maybe I should have kept it in because like people actually got paid out more than they lost in the end. I think there was like some premium on the payout. I had friends who made some money back and more from FTX. Yeah, I mean the thing about FTX, right? Like what people forget is FTX shipped a lot of things. They shipped them very fast, and they ran rampant around some of the Chinese exchanges because not only were they kind of more trustworthy and they kind of had like a stronger kind of GTM and social presence, and they had like this whole cult of personality around SBF that who even is the OKX founder? Like I don't know still. Like I'm the Chinese exchanges have some stuff going for them. Obviously, I think they have very very strong on the ground kind of GTM operations. But in terms of overall aura, I think FTX won that game, and I think the other thing people forget is they were the fastest to ship by a mile, right? So this is pre-AI code gen era. They did have very very strong engineers, and whereas other exchanges, they had they had the UI and they had the central limit order book and they had liquidity. FTX had so much more than that. FTX had prediction markets for anyone was talking about them. They had the Trump market. FTX had Coinbase pre-IPO, and it worked, right? Like pre-IPO markets are pretty dead nowadays typically, but like just for the Coinbase IPO, it was a very hot thing to list, and they managed to list it, and there was liquidity, right? Like it wasn't like it was completely illiquid, like $10,000 each size of the book.
Was it GCR who was like who bet like 10 million on Trump at 10 cents or something? That's like a famous thing.
Yeah,
But
yeah. I think I heard that. They're the ones who provided this liquidity, and I think they were backed by like a great trading firm as well, Alameda. Obviously, there were issues with that. In that, turns out some of the reasons they were great is they were borrowing some of their customers' money to fund these positions. But I think key thing for them, for me, having looked back at like the history of exchanges, the key reason exchanges keep winning is like they manage to list stuff and ship stuff, which is very much in the zeitgeist at the time, and they become the only option for people to trade. Like if somebody wants to trade perps on photonics right now, which are very hot on FinTwit, if not crypto Twitter, they'll come to crypto Twitter eventually. We're the only option, right? We're the only option out there. I think that's why Hyperliquid won, is they were able to list perps on up and coming coins much faster than centralized exchanges did. And I think that was FTX's key success story as well. They were fast. They had back in those days, there was a lot of fragmentation of liquidity. I remember wanting to buy a certain altcoin. It was altcoin season in 2021. I'd have to look on CoinGecko, where is it listed? It would be like one random sex that would have listed it. There would be either be OKX or KuCoin or something, and I'd have to make a new account with them, and I'd have to like transfer money, and they wouldn't support all the chains. And I remember after I started doing this, very quickly in a few months, FTX would just consistently have everything, right? So there was no reason to ever move off FTX, right? The only reason you would is like liquidity was probably a bit better on Binance, right? But Binance only listed a very small number of coins; they didn't list every coin.
yeah.
So that was the key thing for them. I think it was listings, it was new features, it was things people liked. They had this thing called Quant Zone where people could kind of use flowcharts to make their own trading strategy. I think we launched a CLI that agents can use to trade, and we've already had people use it and give positive feedback. So we're trying to do our own version for the modern era, the AI era. There's different listings out there, different products, different UX features that people want. But I think there's no secret, right? You just have to work hard and give the people what they want. And I think that's what we're aiming
Yeah,
to do.
and also I see you active on CT asking for feedback and stuff. So
Yeah.
I've noticed that with Jeff. I noticed that even when in the SBF era, even he was doing that. So that is a common thing. But but one thing, like you're building, obviously you said you're not building for the crypto degens, you're building for a much bigger market, and you're building for someone who brings more size, who trades more size, who has more options, and just in general the market is so much bigger than crypto. But you are still you're building on in general like on crypto rails, and people have this obsession, like not obsession I would say, but at least they look at decentralization in a way, at least for Perp DEXs, how secure it is. All these hacks has people worried, at least they are like wondering if Hyperliquid is safe right now. But how do you kind of where do you stand on that spectrum? Is it like progressive decentralization is something you're currently perceiving, or is there anything that like in the pipeline for decentralizing QFEX, or is that even like something you're even working on?
Yeah, it's a plain vanilla trade-off, right? It's basically how much of your code do you expose and decentralize and leave your security surface open to attack, versus how much do you keep to yourself, run yourself, and basically like have security, right? So that's a plain trade-off. In technical terms, right, what happens with any exchange, whether it's centralized or decentralized, whether it's like CME or like Uniswap, that's the complete polar opposite ends of centralization I can think of, is there is a matching engine, right? That's where the exchanges, where the trades take place. And there's multiple copies of the matching engine. Even CME, they have multiple nodes, right? And the reason for that is you can't rely on one EC2 instance in Amazon running all the time. It'll, I think EC2 only has like 99.5% uptime. It'll break, and then you need another EC2 instance to come up and basically take the load and basically start doing the trading. So you always have multiple exchanges running, multiple matching engines running, and they basically stay in sync. They process every transaction, and if they go out of sync, then they have like a reset mode where they get back in sync. And then if any of them dies out or any of them goes out of sync, then the other 2 or 3 or 5 or 7 that you're running are healthy, right? So that's how an exchange works. Now, on the completely centralized side, all the code for that is closed source, it's locked down, nobody else can access it. People run it and they broadcast the transactions. And if you see something fishy, you can basically say, I basically think I've been scammed, and that news will spread and nobody will use your exchange, right? And it's like that whether it's kind of centralized or decentralized, right? Because even if you're decentralized, yes, you can run your own copy of the matching engine, your own validator, but very few people are actually capable of doing that. They still rely on the community going out and telling them, like, hey, this matching engine doesn't really work very well. I think I put in an order, but like it didn't fill the right price. I think I got scammed or whatever. You're relying on another code auditor to do that. Most code auditors are not very good. They won't catch anything. People say, oh, if you're regulated, then it's fine. I mean, regulators don't know how to read code, right? So in general, like, just because a regulator says this company is like legit, what it means is, if they're not legit, we'll put the founders in prison. It doesn't actually guarantee that you won't lose money, right? So if you think of that as a spectrum, right, centralization, decentralization, what you're basically saying is, would I rather trust the community, basically, to tell me that the exchange works, basically, and it isn't going to scam me, isn't going to rug me, right, on one end? And on the other end, are you trusting that, some regulatory authority or someone has said, like, we've checked these guys out and they seem legit, they're not going to scam you? And in both cases, there's trust involved, basically. And in one case, it's kind of easier to recover your funds, and it's easier for the company to say, what, there was a hack, we'll backstop the funds. And on the other case, there's no one to complain to. And the same issue people find with banks is like, people don't trust the newer fintech banks that only have an app, because there's no one that you can call and basically say, hey, there's been a problem, and there's no one with discretion to like save you money. So I think, what happens with every decentralized protocol is eventually it gets hacked and people lose trust, and then people move on to another one. I think that will stop at some point as people learn that no DeFi protocol that's truly decentralized is hack proof, because the security surface is just too large. Now, there are a bunch of exchanges out there that, are not properly decentralized, but claim that they are. I think it's fine, because a lot of the community know that they're not decentralized. I think as long as people are aware that they're trading on something that's effectively a centralized exchange with a narrative of decentralized exchange, it's fine. We don't have the pretense of that narrative, right? So we just say, look, we are on crypto rails, we're on chain, your USDC lives on Arbitrum, we do our kind of payouts and matching, and everything is processed on chain in that perspective. But the matching engine itself is going to happen off chain, because it's too sensitive to give out to a bunch of people and have reorder attacks and mistransactions and stuff. And that gives us a lot of advantages, right? It means we don't have to worry about security. It means that, we can run a very performant exchange. A lot of the traditional institutional traders that we have on our exchange want a low latency platform. They, hundreds of milliseconds is not normal in TradFi for like traditional instruments. CME runs on like nanosecond level time frame. So, or microsecond level. Eurex lives on nanosecond level time frame. So we're right there in the middle. We're in a hybrid. We've taken the best from both worlds. We have built on stablecoins. We think that's the future. We've built a central limit order book off chain because we think that's the future. We don't think decentralization belongs everywhere. I'm a big proponent of crypto and its technologies. That's why we've taken so many of them for our exchange and tweaked them for the TradFi world. And I think like long term, the world will converge to somewhere in the middle. Like I said, somewhere between centralization, decentralization. Already,
Yeah.
a lot of the exchanges that claim their perp dexes are already kind of in that world anyway. We don't really see a pure Uniswap where you directly call the smart contract basically anymore. Most exchanges now have a WebSocket endpoint. That bit is off chain. If one thing is off chain, then none of it is really fully decentralized.
Awesome. I think, AK, one thing that I was curious about, because, you know, the way people in crypto, the perp techs attract new traders and stuff, they run points programs and all these kind of things. You're kind of targeting a different audience where they probably don't even know what that is. They probably haven't heard about it, or they're not even interested about it. How do you get to that kind of group, right? Do you see a lot of these Robin Hoods and all of these exchanges? They have this traditional pool, how you guys kind of reach that audience, that target market, or is it slowly going to kind of organically?
Sorry, you cut out for like 5 seconds in the middle of that. I'll have to ask you to repeat.
Yeah, sorry, no worries. Yeah, so you mentioned about uh, this exclusivity agreement with hyperliquid S&P 500. It doesn't really matter, but when someone, even I think you recently mentioned this about some Google test, you go check it on Google to see if the ticker matches. So that kind is very important, right? Like I go and see if I'm trading the right thing. So how do you kind of tap into that audience who's not really into crypto, but they want perps, they understand leverage, they want to use these instruments? How does that kind of distribution work for you guys when you're not like quote unquote crypto perp decks?
Yeah, I mean, most of our users are from the crypto world right now. I'd say it's like an 80-20 split, crypto, non-crypto. Basically, the non-crypto audience doesn't really know what a perp is. They know what stocks are. They don't want to buy them with leverage, but they get confused what the perp contract is. As for the S&P 500 thing, I think my only point on Twitter was that it wasn't an exclusive deal, and it wasn't exclusive because they deleted the tweet, right? Like, I think it is important to have naming, but it's not as exclusive as it was made out to be. It wasn't a partnership or anything like that. And yeah, I think in the crypto world, most people know what US 500 is, or US 100 is. It avoids issues down the road. We actually wanted to kind of emphasize that we are listing these contracts, right? And we have contracts on US stocks. We have even contracts on Taiwanese index. We have contracts on contracts on the Nikkei in Japan. We have contracts on the Hang Seng index in Hong Kong. And we want to emphasize that we have a bunch of global contracts, right? And a lot of other exchanges do, and there are even more popular perp dexes than us, or less popular ones than us, that have these contracts. But any kind of claim of exclusivity, I think was overdone there. Yeah.
I don't really follow the Indian market. I mean, I have some mutual funds, I hold some gold in some ETFs and stuff like that. But I know what I do know, like from service level research, is that people love Indian traders love options and futures. The volume is staggering, and I'm kind of have a feeling that they would love a Perps product, obviously. Uh, so how do you like, at some point, all of these guys, if perps do become what we think they will become, how does something like QFEX or any other perp techs gonna tap into this? You have like what 30, 40 million traders. I'm not sure, but uh, that is burdened by regulation, I would say. How do you tap into that? Is it something where once it's ready, then you go there, or is it something that you have to kind of try and attack that market? Like,
This is very much like a Polymarket versus Kalshi type question, right? Like, a Polymarket has always been like a very crypto focused company, and most of its users are kind of from the crypto world. Kalshi spent many years basically convincing people to trade event contracts and prediction markets, and it for many years was pretty unknown as a company, right? They weren't doing a lot of volume, not doing a lot of revenue, and they basically convinced a whole new audience to come and trade like a new type of contract, which is a much harder problem to solve. So the same thing with I think you mentioned the Indian market or whatever, but like yeah, there are a lot of markets out there where people, not necessarily super familiar with crypto. Even the US market, right? Like there's a few kind of active people on crypto Twitter, but the vast majority of Americans who own stocks like haven't really traded on a perp dex before, right? I think the key thing to remember is like the TradFi game is much bigger than the crypto game, and it will take time to convince people. What is a perp? Is it better than options? Is it better than what you're used to? How is it? It's a simpler product, so it's easier to explain. But it will take a long time to convince those people to come and trade on our platforms. The first thing we'll do is we'll list equities and indices which are familiar to that market, so people can use that for marketing. Like we've listed Korean stocks, we've listed Taiwanese, Chinese, and Japanese indices. We'll list those stocks from those countries as well. Again, mostly targeting the crypto audience, and then moving away from the crypto audience and into more of the TradFi audience as well. So I know there's active trading community in India, partly because I used to trade Indian single stock futures and equities market in my last job. That was what I moved to after I did crypto. There's a lot of retail demand. I think, provided that we satisfy all the local regulations and stuff, no reason we can't list some Indian equities and get started there as well. Key thing for us at the moment is that blocker of a lot of people in India, because crypto trading has been illegal for a number of years now, aren't familiar with the UX. We have to kind of reimagine the whole product from scratch. It's the same exchange in the back end, but what the front end looks like and what the messaging is has to be reimagined, and that's a pretty big task.
And then, AK, I think that speaks to something more about like the listing strategy that you guys have.
Mm-hmm.
With Hyperliquid, we see that they want to list every asset as soon as possible, and that's usually like related to crypto. Now that we have more traditional assets coming up, they're trying to keep up with that stuff. How do you guys think about listing new opportunities on your exchange?
Yeah, we have like a very vocal set of power users, and we listen to their demands, and they're more plugged into the trading ecosystems that they're in than I am. Like I said, we're not just popular in crypto Twitter. I think those guys will just trade whatever can be farmed, to be honest. I think a lot of those guys don't have very strong opinions. I think there's different parts of the internet that we're on, Substack, FinTwit, a lot of people there discussing. I mean, FinTwit is all over photonics right now. Martin Shkreli just did an amazing podcast. I encourage everyone to watch TBPN, where he's talking about photonics computing. Takes me back to my university days, not 10, but I guess 6-7 years ago now, I did a course on like what a photonics computer is and how it's kind of a hybrid between a classical and a quantum computer. And we listed photonics based on user requests. We're going to list a few more South Korean stocks as well tomorrow, by the way, so stay tuned for that. Based on user requests. So we're just out there keeping our current users happy. And I think, people who want to build narratives around trading in like large cap US companies, I think it's so much more interesting than crypto right now. There's a podcast I went on previously by a guy who runs HIMS House, which is a community for people who are kind of interested in researching HIMS as a stock and the company and what it's doing. Obviously going through a lot of turmoil right now with the AWS news on GLPs. But understanding, how they come to a thesis and how we can best serve them for their liquidity needs. A lot of these guys don't even understand the concept of going short, right? Like, because a lot of these stocks you can't even short on like a typical US brokerage. You have to buy a put option. So he was like, can you list like an inverse perp contract so I can go short it? I was like, well, you can just go short by selling. You don't need to own the perp in the first place. So basically bridging those kind of communication divides and letting people know what's possible is key there. And we're willing to take as long as it needs for that communication to happen. Because I genuinely think, from a trading perspective, both retail and institutional, crypto has worked out the best market structure that's ever existed, which is kind of the perp dex.
100%. I've been active in crypto like for the last 3 or 4 years, but just following the equity side of things, the macro, it is probably 10 times more interesting than what's happening. It's always like I don't have to, kind of vibe trade in tokens, where I can actually, like, I watch Clavicular on my timeline all day, and I'm like, okay, I have to long hymns, right?
Yeah.
Or Dylan Patel is on some podcast talking about semis or something. Okay, I have to get into semis because it's like a really cool guy talking about it. And so it's kind of really cool where this convergence is happening. And like, for example, even IPO stocks, right? Like pre-IPO, like, it's kind of crazy that not a single normal person. I think Kobe said this the other day, where normal person was able to participate in these SpaceX, Anthropic kind of rounds, like a normal retail investor. So I think that's kind of something that's possible with more equity perps going live. But yeah, is there something final words, AK, regarding where people can go to start trading on QFEX, or anything that you want to point to?
Yeah, just qfex.com/trade. We just listed like 5 new photonic stocks today. I would say, QFEX is for like people who are serious about TradFi. So we have more TradFi listings than kind of any other Perp DEX, and more liquidity most of the time as well than any other Perp DEX as well. We're for people, who genuinely want to take like differentiated views on different stocks, different commodities, macro, whatever. If you want us to list anything, just DM me on Twitter, and we'll see what we can do in conjunction with our market makers. And if we can, get solid liquidity on it, we'll list it. We're aiming to make like a serious product, and not just, it's not for points farmers right now. We're trying to grow and get signal from people who are serious about using our product. And I'm very approachable, so just feel free to reach out anytime.
Awesome. That was AK from QFX. Thank you so much, man. This is awesome. And when I'll definitely try it myself and reach out if there's anything I can give feedback or anything, and we'll drop it in our Telegram chat as well. This is awesome. Thank you, AK.
Okay, thanks guys. Cheers. Bye bye.